What is happening, guys? It is your boy Jack. I'm not a financial advisor, and today I want to speak about this right here: how the market reacts to war. What's my microphone doing? First things first, I just want to say, if anybody from Ukraine's watching, oh, it's horrific. I feel very bad for you, man. It's absolutely terrible. This isn't going to be a happy-go-lucky video. I'm not going to cover the whole situation that's going on over there. I think everybody can find that information for themselves. I think there's a lot of videos on it. And yeah, reading into it is not doing good things for me today. But I want to make a video. I want to make it based on this article here, how the market actually reacts to war. And it's going to go back through some historic information. And there's a lot of hysteria out there right now. There's a lot of fear. There's a lot of weakness right now. There's a lot of people ready to sell everything. There's a lot of people with conflicting perspectives in regards to what should happen next and what is going to happen next. What is going to happen if a full-blown war does ensue? What if, there's a lot of retaliation towards Russia right now? And then we still have general fears of inflation. We still have general fears of what the Fed is going to do in March, and this is going to change everything. Basically, there's a whole lot of fear out there. And I hate adding to it, so that's why I want to make this video today. If you want to get more scared and if you want to do all that, you can do it yourself. But this is what I am going to be speaking about, okay? So, how the market reacts to war, my friends. I don't want to waste time. I don't want to speak about everything. War and your portfolio. A history of it, okay? Here's some averages. The largest historical drawdown due to war was in conjunction with Nazi Germany's entry into what was Czechoslovakian nation in 1939, okay? Everybody's aware of this. The S&P 500 fell by 20.5% and 25.8% respectively during the following 22 trading days, okay? Now, what is insane is that 1 year after these instances, the market was up almost 19% and 9.2% respectively, eliminating much of the drop. So only a year later, nearly the entirety of that drop was already gone, which is absolutely insane to be thinking of right now. Especially when we look at stocks today, we see the Nasdaq's down over 3% in the futures markets as of recording. S&P 2.5% after yesterday being down, I think it was about 1.8% as well. The Dow is down. Look at that, nearly 800 points at 2.4% for the Dow, my friends, already happening. If we look year to date, I believe S&P is, after market open, going to be down somewhere in the realms of 14%, maybe it's 13%. The Nasdaq even worse. We are already in correction territory, simply put, and it's not looking like it needs to get better absolutely immediately soon. But anyway, some more examples. During Pearl Harbor, the S&P 500 dropped around 11% in a single day after the attack. A single day. Despite everything, it was up 15.3% 1 year later. I mean, wow. It's insane how quickly things can turn around. During the oil crisis in 73, the S&P 500 fell by more than 17%. This was also followed by the slowest recovery since the Second World War, okay? On average, the S&P 500 has been 6.5%, okay, 6.5% in negative territory 3 months following an armed conflict, okay? We're already more than halfway there, according to the pre-market today, pretty much. No, don't even worry about what the last few months have brought us, okay? And around 13% positive 12 months after said conflict. I mean, the statistics are absolutely insane. When the Soviet Union invaded Afghanistan in 1979, there was a 12-day consecutive index drop, okay? The Soviet Union of about 3.8% in total. I said, look at how much we're down already. I mean, look at the futures. We literally just showed you S&P about 2.5% pre-market. I mean, it's absolute insanity, my friend, and it's absolutely horrible. I mean, I even feel weird making this video now. It really does. It doesn't feel like we should be making videos. But anyway, geopolitical events and stock market reactions. You can see all of these stock market events, okay? Absolute shockers. The 1 day moves, average of 1.2%. Some of them barely moved at all. Some of them near 5%. The total drawdown, an average of 5% total drawdown from geopolitical events, okay? The bottom, okay, on average, took about 22 calendar days. The recovery took about 47, okay? Now, obviously, Some of them take no time at all. Some of them take an awful lot longer. But you get the picture here, okay? We can get a rough idea of how low we can expect to go and a rough idea of how long we can expect the recovery to have to take, okay? Now, how to handle a war-based crash. And I think this is potentially the most important thing that's going to come from today's video, because that's what we have to figure out right now, this very second. Because simply put, that's what people are trying to do right now. And that's why we're trying to look back at this historical data and get an idea. And as well, we can't just look at this data, because we have to keep in mind that we're still recovering from the Roni, and we're still, worried about everything to do with the Fed, inflation, etc., etc. People are afraid of Cathy Wood now. She's selling absolutely everything with a pulse. But anyway, how to handle a war-based crash. From the beginning of World War II to its end, the Dow was up more than 50%, over 7% per year. During both combined world wars, the stock market grew 115%. I mean, it's insanity. It is absolute insanity. It doesn't make too much sense. So, the outcome and interpretation. What do we do, okay? And obviously, these aren't my words. These are from a different author. Right. We find the most qualitative of companies and stocks. We do research on them to make sure that things will continue to be at least, very least, borderline positive. We make sure that we buy them at low value, not fair value or high value, low value. We don't want fair or high valuation when I go on shopping tours. During a market conditions like this, you shouldn't be paying fair value or high value. Things are bad. People are afraid. People are selling absolutely everything. You should be able to find companies at a really, really nice valuation. And this is kind of what I've been speaking about on the channel a little bit lately, is that I'm not as willing to buy things I was in 2020. I'm not as willing to go very all in on high risk growth. In fact, I'm selling some of my positions that I took during the hype, during all of that, where it was really easy to make money. Now those positions are red, and I'm going to lose money on them, despite the fact that I could have made lots. I made huge mistakes there, but it's lessons learned, and I'm going to try carry them forward with me. But what I do personally want to do right now is look for quality stocks at good valuations. I know when you look at broader indexes, it's still hard to justify buying an awful lot of them, even the S&P, even the Nasdaq, even the Dow, even though over the long term it's a lot better buying them now than it was even a month ago. But within those indexes, there still are an awful lot of companies at good valuations. And I mean, I don't like to use Tesla as an example, because obviously our valuations still aren't great. They've gotten an awful lot better. And I mean, from those peaks, I mean, look at how low we have come down, my friends. Where do I do this short position? Imagine you did catch Tesla right here at the very top. Boom! It is down near 40%. Now, this is Tesla. This has happened many times in the past. I don't think people will be too surprised. They've broken long-term trends on several occasions at this stage. They're kind of in free fall, as the large majority of stocks are. How many companies in the S&P, in the Nasdaq, in the Dow are down 50 to 70% right now? A lot more than an average world. Now, that's because these companies got so heavily inflated in 2020 with the influx of retail investors for one, and also with institutions buying more and more when things were hyped up. But now everybody is selling pretty much everything. What's my plan? I think the main word that has to be looked at here is quality, okay? I'm definitely going to be adding some of the more boring companies to my portfolio. It's something I wish I did more of during the crash of 2020, when they're at good values. I mean, I don't want to, be buying the likes of Disney and Google and Amazon near all-time highs when the valuations aren't good. But you bet that if I can buy those boring companies, okay, that are in good positions balance sheet-wise, that have their revenue growth at relatively decent percentages, that are proven companies, you bet if I can buy them at very low valuations due to something like this happening, that's what I'm going to do. The risk-to-reward ratio is going to make a lot more sense than these high-risk growth stocks. And now, am I still going to be buying my growth stocks? Yes, I'm down huge in my Palantir, my Corsair, and they're still two of my favourite companies that I will continue to buy when we start to see signs of reversal. When we start to see things like that be able to perform in the current market climate. When it's not just red day after red day after red day. Because until there is a sign that growth can perform again, there's no need for me to continue loading the boat. I'm not going to try time the bottom here. Maybe I'll buy it after it's already bounced 10, 15, 20%. but those companies could still be down 50% from the highs after that bounce, and I could be in a much safer position, and then I can still accumulate. It's absolutely fine. It means that I won't have to buy the dip, and then buy the next dip, and then buy the next dip, and then run out of cash. I think what's important to remember right now, guys, is that if things get worse in Ukraine, that's much more serious than our portfolios. So I've highlighted here what to do if guns start firing. Get out your shopping list, okay? Be prepared. Know what companies you want to buy. Start keeping a closer eye on them. Look at the valuations. Look at their most recent reports, see what their balance sheet looks like. Maybe go see what it looks like compared to 2 years ago. See how they have performed during Roni times. Because more than likely, if they perform well during the Roni times up until now, they're going to be able to perform well regardless of what happens over the next 1 to 2 years. Get your shopping list out, okay? There's been a long time there where we haven't really had to follow things too closely. Everything's been doing all right. There hasn't been too much going on. Now it's time where you really need to understand what you buy again, in my personal opinion. One of the very few things you can control in the stock market is what you buy, is what you understand, is the companies you are invested in. You can't control what's going on in Ukraine and Russia. You can't, control these macroeconomic events. You can control what you know and what you invest in. So please, my friends, do that for your own sake, okay? Again, it even feels weird making a video, man. I don't know how I'm going to keep making videos when this is going on in the world. But anyway, my friends, that's all I really have to say on this situation. Real talk for a second. I hope you're all doing okay personally, especially with the situation, especially with where the world is right now, especially after we've all lost a lot of money, like literally nearly everybody, especially just people who held stocks and continue to buy stocks. I really do hope you're all doing okay, because I know the toll that can take on you mentally. Now throw in everything with the Fed, now throw in the potential of a world war. Just take care of yourselves, my friends, okay? Aside from that, guys, if you watched all the way till the end, you are a true legend. I really do appreciate you being here. I'm sorry I'm not the typical happy-go-lucky Jack, but I can't put it on when speaking about a topic like this. It's not possible. Anyway, guys, I hope you all have a beautiful, blessed day. I'm going to see you for another video very soon, hopefully. Peace.